Good morning, guys. Hope you guys had a great weekend. Um, like I said in my pre-weekend videos, we're going to start this week with technical analysis. So, just a couple of things to recap. Uh, Remember, everything that we do is grounded on the principle that we're trying to extract market behavior, sentiment. Um, the price of rice has got nothing to do with the value of rice. So we know that the price of a financial instrument is influenced by sentiment, behavior of individuals. And everything we do is we're going to try to extract that behavior. One of the tools that we use for that is technical analysis. That's where we take a graph or a chart and we analyze that chart. And through our analysis tools, we can extract potential behavior of individuals or groups of individuals across the planet. Another way that we can do that is obviously fundamental analysis. That's where we look at news events and we predict potential behaviors based on news events. For instance, an announcement that Donald Trump will do due to trade wars with China or Korea, etc., etc. So the first tool that we're going to use in analysis is support and resistance lines. Support and resistance lines, guys, is the most used tool across the planet. All traders underneath the sun uses support and resistance lines. So it's the most used tool, and it's also one of the most authoritative tools. So in other words, it carries a lot of weight, it carries a lot of authority within charts and analysis and the picture it creates for traders across the planet. Hence, it's a very important indicator. Before we hit that, let's just recap on what a trend is. Remember, we said we had we can have a bull or a bear trend. I just opened NASPARs here, so just have a quick look. Bull trend, price goes higher, retraces, makes a new high, retraces, makes a higher high, and so goes and so. Higher highs and higher lows is the identification of a bull trend. Bear trend, price made a high there, pulled back, failed to make a new high, and broke the previous low to make a new low. Then failed to make a new high, made a lower low. So now we are in the bear trend. So bull trend, bear trend. So just to recap, remember what a trend is. Okay, so for support and resistance, I'm not going to use MT5, the GT24/7 platform. I'm going to use something that's called tradingview.com. And the only reason I am using tradingview.com is because we're going to do it via Bitcoin, and the Bitcoin chart on MT5 at the moment is a bit wonky. The data they're pulling in there is not, I'm not happy with the data and the way the candles are forming with it. I still need to call them and find out what's wrong with it. So going to tradingview.com, I would have emailed you the hyperlink. It would have had a big button in the beginning of the screen if you haven't registered yet, which says launch charts. Then you can just register for a trial version. That will just remove all the annoying messages coming up. But guys, we're not going to trade on this platform. I'm only going to use this platform to get access to nice Bitcoin charts with historic data so that we can do the session on support and resistance lines. Once you've got that, we can go back to MT5 and you can literally open up any instrument, being it a currency, being it a CFD, being it whatever you want, and you can go have a look at support and resistance lines. But for now, I am using Bitcoin for that, just so that we can get a nice analysis tool. And once again, after reviewing Bitcoin a bit, it really lends itself to support resistance lines and formations, which is what this session of the course or the mentorship is all about. All right, so we'll click on charts. Right, so it will open up like so. Mine's opened up in Bitcoin. Yours probably wouldn't be in Bitcoin yet. So top left-hand corner, you'll double click in there and you'll type in BTC. That's the abbreviation for Bitcoin. We will go down to Bitcoin USD. So that's the currency pair. Okay. And it will by default probably open up in daily, but just make sure that that's a D for daily. If it's not, you click on that and you go down to daily. And that opens up historic data of Bitcoin since its inception or its listing. Right. So on the right hand side, you'll see all this gibberish. Yours might be news feeds or whatever it is. You will have a little arrow there, very light gray in the middle of this gray bar. If you click that, it will hide that. So it just gives a little bit more space on the screen, easier to work with. Okay. And then it might pop up all these hide 34, just hide for now. Okay. Then just another thing on the platform to be able to zoom in and zoom out. If you hover at the below of the screen with your mouse, you'll see there's a plus and a minus. The plus is to zoom in. The minus is to zoom out. We're going to use that a lot. You can also hover over the price movement here and then just left mouse in, drag up, drag down, and on the dates, drag left, drag right to just extend the chart. So make it easier to look. So we're going to use that. So if I bounce around and I'm zooming in and zooming out, you don't know how that's done. It's done at the bottom of the screen, where you can just zoom in, zoom out, or you can drag and drop over your date or your price movement. Okay, support and resistance, very important. So let's define what it is. A resistance or a support line is a price area where the chart or the price movement of an instrument is struggling to break through. Okay, so it's an area, a price level where the price movement of a chart cannot get through, cannot trade through that or above or below that price level. It's struggling to get past that. And therefore it bounces off that price level. Let's have our first look. So we're on a daily chart, check a horizontal line, and I'm going to draw a horizontal line there. Let's just make that a nice solid line. Let's make that a nice fat line. So there is a line drawn. What do we see here? We see that the price movement came down to that specific price level. It then bounced off, moved on over a couple of days, came back to that price line, bounced off again, pulled back, tried it again, bounced off, tried it again, and then bounced off. Think of a ping pong ball. But effectively what has happened is this price level, where the green line is 6664 to 6,000, which is actually the price level, but this area of price, let's see if I can actually make that thicker. Okay, can't make it much thicker than that. So price came down, the price movement, it hit that area of price, that price level, did not close, did not break through it and continue, bounced off it. Came back, tested it again, bounced off it. Came back, tested it again, bounced off it. That is a support line. In other words, it supports the structure above it, which is the price chart. And it's withholding that price chart from breaking that level. So that level is a strong psychological level where traders trade, shorting the market, price of Bitcoin is going down. But when it hits that level, the sentiment in the market suddenly shifted and people started to buy again. Buy or bought to a certain level, price came down again, it hit that level, sentiment shifted. And the sentiment that was there was the bears wasn't confident enough to short the market in. So there was a lack of confidence that the price of Bitcoin will go lower. And there was an increase of confidence that the price of Bitcoin will increase, it will bounce, won't go lower than that level. Support. So what is resistance? Well, resistance is the opposite of support. So that's a nice resistance level for us there. Just make it a little bit thinner. And so what happened here is price came down, bounced off, it hit that level, tried it again, and then bounced back off it. Okay. What was interesting here is if we look at the price level here, it actually tested it here. So this came down, tested at that level, bounced back up, okay, break through it, then could not break through it. So that's our first point of resistance. Came down, second point of resistance, third point of resistance. All right. And actually, if you look here, it's been tested on that little candle there, right, initially already as well. But support withholds the price movement from breaking through it. Resistance withhold from price movement to breaking through it on the opposite side. Support, resistance. Now, what we say is if support breaks, then it becomes resistance. So what does that mean? It's a very simple principle. It means, actually, let me explain that to you in the next time frame because there's no real good example. Well, there's actually an example here. So it moves down. That price level was support here, right? You could see that the candle moved down. It then bounced back up, came down, and it struggled, broke back, came back up, and not really. So it is so it was support here, came up, broke through it, and then it became resistance. So the one was underneath it, supported that, went up, it broke it then, and then when it tried to break through it again, it stopped it. So then it became resistance. So one moment, this line was support over there. When it broke through, it became resistance. So technically, when a strong support line gets broken, so if this support line down here gets broken down here, if this goes down, let's get a line here. So if this line, this goes and breaks through that line, okay, then that support line will then become resistance. So if that trade will go down and then go back up, it potentially would bounce back off that as it did over there. It's just an important technical concept to remember that when a strong support line has been broken, that support line in the future might become resistance. If a strong resistance line has been broken, then it will become support. But we will see a little bit more of that as we go along. So this is on daily. Now, we've already talked a little bit about multiple time frames. So each candle in this chart is 1 day. It's equivalent to 1 day's data. Now we can go and we can zoom out and we say, okay, let's have a look at 4 hours. So in this case, each candle will be equivalent to a 4-hour period. All right. So in the day, so 1 day's candle will increase the volume of candles significantly. So let's just have a look. Let me just zoom out a bit here. All right, so we will have 6 times more candles than in the previous chart, right? Because every day can be broken up into pairs of 6 4-hour charts. So the moment we increase our timeline, going up the time scale, or actually down the time scale from day down to 4 hours, we've got more candles. And the moment we go into lower time frames, then it becomes more noisy because there's more candles, more movement for the same direction. So where you would have had 1 candle, you now have 4 candles. You now have 26 candles. Where's my mind at? So let's zoom out on our 4-hour chart and we see what happens. So the green ones was the primary support resistance lines that we could see on our daily chart. It was very clear on our daily chart. Now we're on a 4-hour chart. So now suddenly we see new support and resistance levels that we didn't see before. First one starting over there. So let's go here. Let's go draw a line. That's the line right about there. And let's give it another color. Okay, we make that orange. I'm going to make it a little bit thinner, and I'm going to make it a spotted line. So this is all of our 4-hour charts. So once again, the higher you go in the time frame, the less, because there's less candles, smoother behavior, it's less noisy. The lower we go in the time frame, more candles, more noisy, more support lines. Now important, the higher we are in the time frame, the more authority a support line has. So this one here, the bottom, this green one, a lot of authority. The smaller the time frame comes, the less authority. It's easier to break a support line than it is in a low time frame than in a high time frame. So let's just have a look. And guys, you're not going to ever trade a chart with candles that you can see. I've just zoomed out so that we have a holistic visual. Right, so when you do support and resistance lines, this is how you will do it. You will zoom out. You will never do support and resistance lines like this, and starting to scroll left and right. You zoom out, you get a holistic view of what's happening, and then you draw your lines from there. Okay, so there we can see, tested it in that area, tested it again, tested it another time. We can actually give it one in zoom so you can see that a little bit better. So it came down, it tested it again, swing back, tested it again, went straight up, tested it again, and again, and again, and then it broke through. All right. So a strong support line for within the 4 hour was at that price level. Okay. It broke that support line, went straight down, came up, and that support line then became resistance. Why is it resistance? It's resisting the movement of this price going up. It stopped it like a wall. All right, so let's have a look at further levels on our 4 hour that we can identify. So here we've got three. So here we've got another level of support that's happening here on our 4 hour chart. So there's definitely a line there. We see there's a definite level over here. Now, guys, I invite you to take your time after this session and just open charts and just go zoom in, zoom out, and see if you can identify support and resistance lines. So the important thing that we have here is that, like I said, it is the most used technical indicator in the world, which means millions of traders looking at the same chart will draw the same support line with the same expectations. So what expectations do we carry for a strong support line? Well, if we zoom in here on our 4 hours, and somebody would have been trading the 4 hours, what is the trading behavior here? Price moved up, came down, tested that, moved up, and retested it. So the moment a line or price level gets tested twice, then it's officially a support level. The more times it gets tested, the more authority a support level has. So in this case, it was a very strong authority because it was tested there, pulled back, came back, although that didn't touch, it was within the range, came back, touched it again, pulled back, touched it again. So each time the bears tried to break through that level. Bears came down, tried, couldn't get it right. Bulls counterattacked it. Bears pulled down right to that level, couldn't break through that level. Tried again, right through that level. Bears, Bulls counterattacked. Bears coming down, says, no, we're trying this again, over and over. So it was tested about 1, 2, 3, 4, 5, 6, 7, about 7, 8 times. So the 3 and above, when a support line is tested 3 times or more, we are looking at it as a very strong support line. 2 to 3, we will draw a line on there, and we will be aware of that level, but it doesn't carry that much authority. Higher count, 3, 4, 5, 6, very high authority. All right. So the more times a support line is being tested, the more attention it draws to itself. So what traders across the planet would be expecting in this case was they would have been watching in that, and all of them would be getting excited. Why? Because of the strong level of support this level is bringing. And when a market goes and the price movement then breaks a support level, think of it as a wall of a dam that gets cracked and then it breaks open. So a great flood of water bursts through that wall, and that's exactly what happens. So the moment the price movement normally breaks a support or resistance level, the net result is a high velocity volume move. In other words, a fast, quick, strong move, a flood of water breaks through that. All right. A little bit more about entry positions and what behavior. What behavior are we spotting? We're spotting the behavior that traders are failing to break a specific psychological support line. That price line, or for whatever reason, was a level where traders were not confident at that moment in time here to trade lower. Now, that could be fueled by fundamentals, it could be fueled by psychology, it could be fueled by many things. And then when it does break that level, when a line that's specifically three or being tested more three or more times breaks a level, it's like the breaking of a wall, and we see a flood of movement going out there. So just basing back to how we are trading and we're trying to extract behavior, this is very simple behavior. The behavior that we can spot and identify is behavior of traders on a specific price level. We know exactly what behavior happened there. And when they retested it, we know exactly what behavior is happening there. The bulls are trying to overtake the bears, and the bears are failing to pull the market down. This continued, this little tug of war continued, and you also can see here, there's no trend, there's no higher high, lower low. And eventually, it gave way, and bears won. Cool. So now we can go one more level down. Let's go down to 1 hour. Oh, we can actually, let's just go back to 4 hours again, because I see there's another level that I can spot that was worthwhile highlighting. And the reason we're doing it in different colors, guys, is very simple. It's just if you're gonna trade once we get there in a specific time frame. In other words, you're going to trade on a 30-minute chart, or you're going to trade on a 1 hour chart. So a specific time set with your strategy will be you trade a 1 hour chart, or you trade a 30-minute chart, 5-minute, or daily, or what have you. But so although you're in a 30-minute chart or a 1 hour chart, you need to know what levels were important on other time frames. So multiple time frames influence other time frames. And we'll get to that when we talk about a trend inside a trend. All right, let's just go here and draw. Where did I see other support lines here? From there. Okay, so that's one there. It's also a line. Yeah, okay, that's enough. Let's not getting it too crowded. Don't, you know, I personally like to draw lines that's been tested 3 times, no less than 3 times. Otherwise, it can get very noisy. And if you get too many support lines drawn out on your screen, you know, it becomes over information, because then you're going to start, okay, which one do we use? Because there's like 50 lines underneath one another. So you've got your primary authoritative lines, 3 or more. Then you get your secondary lines, which is 2 to 3. Normally, my primary lines I draw as a single line with a specific color, and my secondary lines I draw as a spotted line with a lighter color, etc. This typically over here, although this was not done in on the 1 hour chart, I would go and make that a solid line, because it was quite significant support line, that right? Right. So let's go down to 1 hour. So now things are going to get really noisy. All right. Every candle is now broken up into 4 more candles. So now we've got 24 candles per 1 candle compared to our daily chart. So extremely, extremely noisy. And once again, like I said, the lower we're going down in the time frames, the less authoritative the support and resistance lines has. And as you now can see, now just getting chaos. You've got support lines everywhere. Everywhere there's like little areas that's been tested 2 to 3 and 4 more times. Here you got an areas. So let's just zoom out a little bit just to get a better view of it. So, for instance, there we've got 1, 2, 3, 4, 5. That area has been tested 5 times. Here you've got 1, 2, 3. This little spot over here, multiple times. This spot over there, multiple times. So we've drilled down to a 1 hour chart, and what we can see is that, all right, it's getting extremely noisy. If you're going to have to start drawing lines, it's all you're going to see is lines. It's going to look like spaghetti. So typically, on different charts, it works differently, different instruments. But we've got on our Bitcoin, we see that we are starting to lose control after about, after a 4 hour chart. Lose control in the sense that we can't, it's very difficult to really start drawing authoritative lines. Why? Because there are so many of them, and it becomes over information. So we start with our daily. We've got primary support levels that's clearly being supported on a high time frame. We're breaking it down, and we go down to 4 hours. We see, all right, well, now we can extrapolate more support levels. We're now at 1 hour. And then we see in 1 hour, all right, now it's getting ridiculous. There's just so many. But you see, what's going to happen now is now we're going to go into the next form of support and resistance, which wasn't as evident in the higher timeframes like daily, 4 hour, but now suddenly is going to become relevant in the 1 hour range, etc.